Now, in this video, I'll either infuriate you or have you stop doing something that you've been doing for a very long time. Either way, both sides will be very much educated about what I'm about to explain about funded companies. Now, before I go ahead and break things down, funded companies aren't actually scams because they give you all the fine prints, they give you all the rules, they give you all the restrictions before you end up paying for that package or paying for that funded account. Now, anything that tells you exactly what you're going to get is not a scam. When you go to the casino and put $100 on blackjack, you know that if the dealer gets 21 and you, for say, get 19, the dealer ends up making money and the house wins in that case. Now, don't get me wrong, there are actually a lot of companies that end up going down for scamming their traders. Why does that happen? Well, you see it online on Twitter, Instagram, they all get exposed because a lot of their payouts don't actually go out because they have to deal with liquidity issues. Now, that's either because their restrictions and rules are too lenient or all their traders are winning. Now, you have to remember, how do funded companies actually make money? They make money because you guys are failing, right? They don't make money because you guys are doing great. They're betting that every single person or the majority of people who go on their funded company and buy funded accounts are going to end up failing in the long run. Now, what does that mean for them? Well, when someone wins, 10 other people fail. And that's their business model. Same thing when you go to the casino. Yes, there are people who end up hitting at the slot machines. There are people who will always win at the baccarat tables. But for how many people who win end up actually losing? Understanding how funded companies make money will have you sit there and think about, wow, so this many people are expected to fail and I'm supposed to stand out and be the winner here? I'm doing another in-person boot camp. I know you've seen it on YouTube where I live trade and teach in person from June 1st to June 6th in Los Angeles. I'll leave the flyer somewhere up here so you guys can see it visually. Screenshot it, send it to your friends, send it to your cousins, and then I'll leave the sign-up link down in the description. Do not miss this one because everyone always contacts me after, but June 1st to June 6th, I'll see you guys in LA. Now, a funded company isn't just like any other company where both sides end up being winners. Well, most times the company will be the winner and the other side will be the loser or the failure so that you can buy another package or another funded account. In most cases, companies have both sides winning, where the client, for me, for example, when I'm trading on my broker, I pay a contract fee, which now the broker ends up collecting, and in return, I get the shares or options that I press the button to purchase. So now when you wrap your head around all of that and you start from the very beginning, how do funded companies market? Well, it's marketing 101. What do you always see from these funded companies where they post on Twitter, Instagram, on any social media platform? What do? Big payouts. And when you think about that and understand the marketing side of that, what can you really compare big payout screenshots, testimonials, or having the clients or consumers post their big payouts? What can you compare that to that is really blowing up in the last 3-4 years and isn't even federally legal in all 50 states? Gambling, sports betting. What do you see FanDuel post the most? What do you see DraftKings post the most? What do you see every single sports betting company post? Big payouts. Now, when you see someone turn $30 into $90,000, what does that click in your brain for you to do? Oh, if that person can do a 20-leg parlay, I have the chance to do it. Maybe not on my first one, but if I do it 5 times with $30 and end up making $20,000, $30,000, the risk to reward is great. Let me try it. Both sides, when it comes to funded companies and sports betting, only post the big wins. And what's crazy about it is they don't even post the small wins. They post the big wins because they know those are going to get the attention. Do they ever post losers? Now, have they? Yes. But what is 99% of parlays that are posted by these big companies for sports betting? Winners. Now, they'll show you sometimes a loser here and there because they'll show you, oh, this guy was one leg off of turning $30,000 into $50,000. He could have cashed out early. then you're going to sit there and say, why didn't he cash out early? Now, what does that do to the consumer's psychology? Well, when you see those things, it makes you think, well, if he can do it, I can do it too. That's just a humanly thing to think. When I see big, successful people in this world, I sit there and say, well, if they can do it, I can do it too. Now, you actually could make money from funded accounts because it's possible, right? They give you a funded account. You have to pass a few stages before you get your live account, and then you can end up making money. But how hard is it to make money from that? Now, is it really worth it? Because if you sit there and think, the company succeeds based on people's failures. Now, if people are getting $20,000, $30,000 payouts, how many people had to fail with those $50, $100 funded accounts that you had to purchase? As a trader, the platform I trade on is essential to day-to-day success, which is why I have to take a moment to the exclusive trading app of this channel, Moomoo, for sponsoring this video. First and foremost, Moomoo charges 0 commissions and 0 contract fees on stocks and ETF options, which lets me get the best bang for my buck when I'm trading. Plus, Moomoo's filled with useful analysis tools like their candlestick pattern finder. This feature alone saves me so much time. I used to spend hours searching the market for good opportunities, but now I can rely on this feature to do the heavy lifting. This feature provides you with 20 different pattern types. It shows both bullish patterns like the double bottom and head and shoulders bottom, as well as the bearish patterns from the double top. Let's take the double bottom for example. First, you'll see an explanation of the strategy followed by a simulated return of the stocks that follow the pattern. And most importantly, below that, a list of stock tickers that fit the pattern is generated. No more manual searching through stocks to find the ones that fit the pattern you're looking for. But wait, it gets even better. When you click on one of the stock tickers, the chart instantly shows you annotations, including the start time, rise probability, and support and resistance levels. This is incredibly insightful and helpful for analyzing the stock. With this tool, you can make more informed decisions based on real-time pattern recognition. It's a simple, efficient way to enhance your trading strategy. And the best part, Moomoo's giving my audience an amazing offer. New users can earn up to 60 free stocks as well as 8.1% APY on uninvested cash for 3 months after making a qualified deposit. And if you prefer to transfer your portfolio to Moomoo, they'll give you a 3% match on portfolio transfers up to $600 in cash rewards. Just click the link down below or use code NOR60. Thanks again for Moomoo for sponsoring this video. Now let's get back to the program. And just like gambling, it's one of the only addictions you can win at, unlike doing drugs. If you do drugs, there's nothing you could really win at, but you can end up feeling great. But when you gamble, it's one of the only addictions that have a possibility of a big return. Now, when you see these big payouts and you see how cheap it is to really fund your account technically, because you're buying a $50 funded account for, let's say, a $5,000 demo account, it creates a habit of gambling and not actually trading because how cheap it is. All you think about is how big and how fast can I pass these tests so that I can make a lot of money just like that guy Noor on Instagram. Because at the end of the day, it's just another $50 account that you have to purchase. So if you blow it, you can try again tomorrow and after tomorrow and after tomorrow and maybe 3 times in a day if you really wanted to. Now, instead of sitting there and saying, I value this $50, let me take this nice and slow and actually look at the rules and regulations and restrictions that they're applying for me to use or to do and sit there and say, okay, how can I build this in the long run? People come into this thinking they can get rich quick. Now, what this does for future traders who see other traders getting these big payouts, they sit there and say, well, I can get rich quick and it might possibly only take $50 to do so. And the best part about it, just like a parlay in gambling, every time it doesn't work out, you can just try it again. Now with trading and how it used to be, you used to have to only use your own capital, which what did that do? It created a scarcity for your own capital because the $1,000 or $2,000 you funded your account is actually your money. So when you sit there and you trade, you try to follow all your discipline and all your rules that you set for yourself, obviously so that you can succeed over a long period of time, and you sit there and follow it to your best abilities. Now, obviously people have still blown their account following their rules and they end up blowing it anyways a month or 2 later, but they're actually putting in effort to actually learn about trading versus buying an account, setting it up, going all in, and then failing it 5, 10, 15 minutes later, and then just doing it all over again. Real emotions will only ever come from using your real money. If you ever use someone else's money, it's not the same. Same thing with, purchasing something with $20 that your mom or father gave to you when you were younger. It was just $20 that your father or mother gave to you, and it wasn't your money that you worked hard for. Now, when you finally got a job, you start to think twice about that $20, $30, $40 meal that you want to purchase because you just have to spend an hour or two to work for it. Same thing with having a real account. When you work so hard at your job to actually accumulate that money, that $1,000, $2,000 that you funded your account, you think twice or 3 or 4 times before you actually make a move in the market because you don't want to lose the money that you worked so hard for. Now, whose fault is that? Is this the funded account or funded company's fault, or is it the consumer side's fault? Well, it can't be the funded company because you knew exactly what you were signing up for. They just took advantage of people who want to get rich quick, and that's 99% of people on social media. You have to remember, people go to the casino every single week with the money they worked so hard for the possibility that they can make a lot of money from it. Instead of learning a skill or using that money to invest into themselves, people make money, go to the casino because there's a possibility that they can get rich from it. And what happens every single time, or 97% of the time, even if they made money this week, they'll lose it the following week. The truth is, everyone wants the easy route nowadays, and nobody wants to go the long route. Back then, I didn't even have YouTube videos to watch. There were so much limited sources where I had to learn trading from. Now, I can go online and see 100 videos pop up on my Explore page. And honestly, I'm not even mad at them. They'll find out the hard way life isn't about taking the easy route. As far as funded companies that are paying out their traders every single day, I'm not talking about the ones that went under and ended up not paying their traders. I'm talking about the biggest ones nowadays who are paying out their traders. They've done nothing wrong. You knew exactly what you were signing up for, and all they did was bet on you failing.